Wondered why some commercial properties are always in demand while others stay empty for years. Today, we are uncovering the hidden secrets of commercial real estate that investors usually miss, but can make all the difference between a high return investment and a dud. Trust me, by the end of this video, you will look at commercial spaces completely differently. Let's start with the basics. Commercial real estate isn't about rent or leases. It's the backbone of cities' economic growth. It shapes skylines, attracts talents, drives infrastructure, and even determines how people live around it. Take Cyber City in Gurgaon. For example, not long ago, Gurgaon was just a small town. Then this IT and corporate hub thing came along. Suddenly, companies, banks, and startups wanted a presence here. Roads got better, metro lines came in, housing grew, the whole ecosystem changed. Or think about Bandra Kurla complex in Mumbai. Once marshy land, now the financial heartbeat of Mumbai. Top banks, corporate offices, media houses, law firms, everything is here. Commercial real estate literally reshapes a city, and as an investor, understanding this impact is the first step to picking a winning property. So, commercial spaces aren't just buildings, they are city makers. Now, before you rush to invest, let's break down the types of commercial properties. Number one, office spaces. IT parks, corporate offices, co-working hubs. These attract long-term tenants but require careful location planning. Retail spaces. High street shops, malls, showrooms. Footfall is key here, so location matters even more. Industrial spaces, warehouses, logistics hubs, manufacturing units, usually long-term leases but demand niche knowledge. Then comes mixed-use spaces, combining office, retail, and sometimes residential. These are becoming popular because they offer diversified income streams. Each has its own risk-return profile, and knowing this upfront helps you narrow down where you want to invest. Alright, now the real insight. Most of the investors usually focus on price per square feet or location on the map. But here are 5 things that people completely overlook. Number 1 is builder legacy and reputation. Investors often focus on the property itself but ignore the developer's credibility, which can be a huge mistake. A builder's legacy impacts everything. Construction quality, adherence to timelines, legal clearances, and even how well the property retains value. For example, in BKC, most high-value commercial buildings were developed by reputed builders. Tenants trusted these spaces for long-term leases because maintenance and compliance were guaranteed. On the other hand, lesser-known developers often have delays, incomplete amenities, or poor maintenance, which can lower occupancy and returns. Remember, a strong developer is like a brand guarantee for your investment. Then comes nearby vicinity and tenant mix. Next, look at who's around your property. Not just the road, not just the sector, but the tenant ecosystem. Commercial spaces thrive in clusters. Take Cyber City, Gurgaon. The entire area grew because IT and corporate offices clustered together. When companies prefer being near other companies, business synergy creates higher demand. Now imagine buying a property in isolation, surrounded by random shops or underdeveloped areas. Even if it's cheaper, finding tenants become hard, rental yield is lower, and appreciation is slow. Also, tenant mix matters. A building with MNCs, startups, and service offices attracts complementary businesses like cafes, gyms, and retail, making it an attractive location overall. The right vicinity increases occupancy rates and long-term property value. Number 3 is city requirements and growth plans. Now, many investors only think about what's popular right now, ignoring how the city will grow. But in commercial real estate, future city plans are everything. For instance, sectors along Dwarka Expressway Gurgaon are now booming because of upcoming metro lines, expressway expansions, and new residential clusters. A similar story happened in BKC, where government approvals for offices and banks created a high-value commercial hub. Ignoring city growth plans is risky. Even a premium property can underperform if the city decides to redirect development elsewhere. In short, invest where the city is heading, not where it is today. Number 4. Manpower availability. Here's something investors rarely consider: availability of skilled manpower. Even the best office space will sit empty if companies can't hire employees nearby or if commuting is difficult. CyberCity's success wasn't just about offices. It was because Gurgaon had a ready pool of IT professionals, managers, and support staff. Residential clusters, colleges, and transport options nearby made it easy for companies to hire and retain employees. If a location doesn't have accessible talent, companies are less likely to lease, which reduces occupancy and revenue. Manpower availability directly influences tenant demand, lease rates, and stability. Number 5, transport and connectivity. Finally, accessibility and connectivity are absolute deal makers in commercial real estate. Even a premium building in a remote area will struggle to attract tenants if commuting is difficult. Companies prefer well-connected locations near highways, metro stations, airports, or multiple roads. CyberCity in Gurgaon thrived not just because of offices, but because it was easily accessible from Delhi and Gurgaon, with smooth road connectivity and metro access. Other factors like parking availability, traffic patterns, and public transport all affect how attractive your property is. Poor connectivity means lower occupancy, longer vacancy periods, and lower rental yields. Connectivity often determines rental premiums and long-term appreciation. Commercial real estate in India offers some of the most powerful returns you'll find, but only for those who understand the deeper layers. From tenant risk to hidden costs, from lease structure to financing and subsegment selection, overlooking any piece can turn your investment into trouble. At State Avenues, our mission is to help investors see beyond the surface and to partner in structuring deals intelligently. This was our commercial real estate hidden truths guide from State Avenues. Stay curious, stay cautious, and stay smart.